What if you need a business credit card, but you don't want a traditional credit check? Maybe you don't have a personal score of 670 or higher, or maybe you just don't want a hard check on your credit history. Turns out there are options. To learn more, I caught up with Ken Boyd. He's an expert at Ramp, and he caught me up on a few options for business cards that don't require a credit check, but still offer a lot.
What are some specific options that don't require a credit check, and how are they different from each other?
The three are there's Ramp's credit card, and basically the idea is because it's not a credit check, instead, it's usually a required minimum bank balance of the business and the revenue, the cash flows from the business. Ramp's card, which requires a $25,000 bank deposit, and then they look at revenue and cash flow as well. So that's Ramp. Another big one is the company's Bill, BILL, and Divvy combined. They're now called Bill Divvy, and they have a Bill Divvy corporate card. Now, that's slightly different because they require a $20,000 deposit, but they also do a soft credit check, meaning that it's not going to go on your credit report, but they are checking it. And a lot of us are familiar with the soft credit checks because we get credit card offers that say, hey, it's a soft credit check. It doesn't affect your credit worthiness. They also require a good to excellent business credit score. So that is beyond the reach of a lot of business owners, particularly with startups with uneven revenue and profit. And then the third one is a hybrid. It's more of a traditional credit card, Open Sky Visa, which requires you to make a refundable deposit. So basically, collateral for your loan is a deposit that you make on the card. The bad news is you've got to make a refundable deposit. The good news is that you can actually carry a balance with this card, and they will charge you an APR just like a credit card APR. It's very likely to be over 20%. So business credit card rent, the Bill Divvy corporate card, and then this Open Sky Visa that requires a refundable deposit. Those are three options for business owners. If you have a lower personal score than 670, you don't want to do a hard credit check. I was a CPA for years. I worked in public accounting at KPMG, and after that experience, some years later, started a YouTube channel, which led to me writing four of the Dummy series books for Wiley Publishing on accounting. I've been a full-time writer and editor on accounting and finance topics, and I also spent some time on CPA test preparation. I've written and edited a lot of questions for the exam. So that's what I do. So with the Ramp card and with most of these no credit check cards, you are required to pay off the balance in full. And that might be daily or monthly. It could be as frequently as daily. And again, the reason for that is that reduces the credit risk to the card issuer that you're not going to make the payment. So unlike a credit card where you can carry a balance that many of us have and there's an APR, with these no credit check business cards, for the most part, you have to pay off the balance quickly based on a schedule that you're provided.
Okay, so most business cards that don't use a traditional credit check also don't have a traditional revolving credit balance. So if they're not for long-term borrowing, then what kind of benefits should you expect?
A couple. First of all, it does help your cash flow because particularly if you're allowed to pay off every month, you do have a window of time during the month where you can use the card, keeps cash freed up and not pay it till later. So there may be within a small window the ability to finance some purchases. The other thing is that they do report to the credit bureaus. So for business, Dun& Bradstreet is the big credit bureau, and then Experian and some of the other ones that we know from our personal credit may also be contacted where they are reporting the fact that you were using the card and constantly paying it off, which builds your business credit score, which means, A, you may be able to get a traditional credit card later, or B, a company like Ramp maybe increases your available balance based on the credit history. So those are two benefits.
And so then by getting this Ramp corporate card, you then have access to all of the software and the other benefits of having a Ramp account, which like you can create virtual cards, share them with your employees, and you can do all of that without having to do a credit check.
Right. And in addition to that, you get the ability for receipts from credit card use get automatically captured. It goes into your accounting system. Ramp has integrations. For example, if you use QuickBooks, it integrates with an automatic sync with your QuickBooks. So it's in QuickBooks and in Ramp. So that's real-time visibility into your spending. So you can set limits on the dollar amount somebody can spend or the type of things they can use their credit card for. And as I mentioned on another video, that sort of real-time lack of delay is the best way to prevent fraud or to prevent unnecessary spending, even if it's accidental. The faster you are able to review it and the faster a software system can alert you to something unusual, the faster you can prevent a problem, which I'm a huge fan of. I've written a lot of articles about credit cards and these cards over the years, and some of these programs have incredibly complicated perks and rewards. That's the problem with credit cards. I actually had a conversation with my daughter who was getting a credit card for the first time, looked at a lot of different ones, and I said, pick one that has a simple reward system. And Ramp has that simple cash back percentage. It's easy to track. You don't have to invest a lot of time, which I think is a benefit. So those are some of the benefits from using the Ramp card.
It's pretty cool that you have access to all that without having to do a credit check, and there's no monthly fees or anything on that, right?
No, Ramp does not charge a monthly fee.
Now that seems worth highlighting. While these cards don't necessarily give you a revolving credit balance, they do give you new flexibility with your cash flow and a new control of your spending, which is maybe just as important. For example, I learned about using virtual credit cards to save money and empower employees, and I actually did a video on that, which I'll have linked right up here. And with some of these cards, you add that new level of spend control to your business, not to mention all of the accounting automations that come out of the box with having a Ramp card. So if a traditional credit check isn't how you get one of these cards, then what is the process and what do you need to start?
So you kind of did already talk about the requirements for these types of credit cards. Is there anything else to elaborate on that, on either what the requirements are or what the process to get one of these cards looks like?
If you can imagine that you're a small business owner and you're going to apply for one of these cards, you're going to have to show them a minimum bank balance that we talked about on the cards that I mentioned earlier. There's usually a minimum bank balance requirement. You're also going to show them your financial statements because they want to look at revenue and cash flow and how that's working in your business, because that's used to evaluate your credit risk. The other thing you'll most likely need is an EIN, which is basically a social security number for a business. So those are sort of the things you have to bring with you when you apply. The other thing is it's very likely you'll need to connect your account to your bank account so that when your payments are due, they're going to automatically deduct from your bank account the balance to pay it off. Again, more security for the issuer. And the other thing is that your credit may increase or decrease based on the amount of cash you keep in your account and the revenue that you work with. And there's one more thing on evaluating credit for Ramp and the other no credit check companies, which is they're going to take a look at the amount of dollars you run through third-party systems like Shopify or PayPal or Stripe, because the more activity you run through those accounts, that's you generating more business and cash flow. And it's also a third party's evidence that you're doing more business. That's better evidence than you just sending your financial statements in your bank account. If you can actually show that on Stripe and Shopify, you're doing a lot of business, that helps your cause and gets you a higher dollar amount limit on Ramp.
All right, so rather than qualifying with your credit, you effectively qualify with the strength of your business, which makes sense to me. And it sounds like it makes sense for a lot of businesses that want to add flexibility and control to their spending without a hard credit check. Thanks to Ken for catching me up on the subject. If you learned as much as I did, hit the like button below and subscribe to Ramp for more expert tips on how your business can save time and save money. See you next time.
To be honest, like this is something I've never looked into, and seeing that something like Ramp is available without a credit check was actually pretty surprising.
There was a lot I didn't know. It's funny, my niece's husband has had a Ramp card since they first had the cards, has sworn by him for years. So they do have a great product.